Hey guys, what's up? Hitori here. Welcome to episode 46 of the weekly market outlook with Trade Sprout. Last week we saw some volatility with markets pulling back after a strong rally. Let's take a look at if those are just a hiccup or are we actually headed for a potential retest of the lows, right? Today we'll break down market fundamentals and forecasts across key asset classes such as equities, commodities, currencies, and also cryptocurrencies. Let's dive straight into the outlook. Okay, so first off, let's take a look at the S&P 500 right here, which is, as some of you may know, this is our go-to gauge for if we're on a risk-on sentiment or a risk-off sentiment, right? So taking a look right here, we did see the market hold steady above the 200 EMA in this black line right here. We broke above it and then we kind of like paused at the top, and now we're pulling back straight into the area of 5.7k to 5.5k, right? This sharp drop, I think, was pretty much triggered by trade tensions, right? As you know, President Trump's comments, they did kind of signal that he want to potentially implement 50% tariffs on the EU starting the June 1st, which kind of did spook the markets quite a bit. But of course, we see this long wick right here on the daily chart on the Ovenda price feed. We did see price kind of have this big, wick lower after that big move downward. So that big wick higher. So essentially we kind of saw a buyer step in right around this price point to kind of buy off some of the potential fears after the price kind of did a big dip. So with that in mind, this may be a negotiation tactic rather than a done deal, right? This movement right here kind of pretty much signaled a potential for that, right? Obviously, if you do zoom out quite some distance away, we are still pretty much just bullish for the indices, right? We've been holding above the 200 EMA for a very long time, and right here we are also closing quite strongly above the EMA, right? So with this in mind, what I'm thinking is that we could see price continue lower into this support. Ideally, you could take a long from this area up into all-time highs around 6.1k. Okay, so if you were to swing this based on just the UFOs, you could potentially do something like this, right? The risk reward is pretty nice, around 2R, so not too bad. But if you would prefer to do so, you could also just look for some low time frame confirmations to run higher, because at the moment we are still pretty much bullish on indices, right? I know with the 50% tariffs on EU, and also I think it was 20% tariffs on Apple, right? That for every iPhone that isn't made in the US, he's gonna implement extra tariffs on that as well. So with that in mind, that's just pretty much for me. Any bearish movements from here is pretty much just a reactionary effect, right? It is just based off of panic buying or panic selling in this case, right? So I think for now this is gonna give a good opportunity for pullback longs up into all-time highs for the S&P 500. Now pulling up the climate, we just turned slightly bearish right here after multiple strong bullish signals. So once this turns bullish, or even before this turns bullish, right, I think it could be a good time for you to look for longs up into all-time highs right here, considering the fact that we are still pretty much still bullish on the S&P 500, right? Going into the NASDAQ as well. Let's pull up the NASDAQ real quick. It did also see a late week decline alongside the S&P 500, but we did see some kind of a bounce around the 20k mark right here. Obviously, same price action, they're pretty much mirroring each other. Climate is still bullish for the NASDAQ. We did see some exhaustion right here at the top. We are quite some ways away from this support, which kind of coincides with the 200 EMA. With the 200 EMA right here. So if it does come back down here, definitely longs, they do look pretty nice and sweet, right? Around a 2R also for the NASDAQ. Take a look at the Dow Jones right here. We are, the Dow is kind of different in terms of price action alongside the S&P 500 and the NASDAQ, but same thing pretty much applies. We are holding above the 200 EMA, coming back down, and we've already retested that area of support that we saw from the S&P 500 and the NASDAQ. So we could potentially go long from here, but the issue is that we also have a new area of potential resistance around the 4.42k mark right here for the Dow, which we don't see in the S&P 500 and the NASDAQ. So if you're long here, this could be something like a roadblock for you, but obviously, you know, targets are pretty much the same with the S&P 500 and the NASDAQ, targeting all-time highs around this area right here, around the 44 to 45k mark right here. So keep that in mind when you're taking trades based off of the US indices. But taking a look at the Russell, let's pull up the future chart for the mini Russell. Right, let me just clear off these drawings. So for the Russell right here, we are seeing some kind of interesting things, right? Domestic onshoring trends, and also we're seeing cooling inflation. It actually could favor the Russell right here. And for those that don't know, the Russell is the index that tracks the small caps, right? Companies that don't reach large cap, that aren't large cap stocks like you see on the S&P 500. The Russell is the opposite of that. So whenever the markets are good, right, you can take a look at the NASDAQ as a sign of how strong the risk on or a risk off sentiment is, right? Obviously, the S&P 500 is still the benchmark for that, but the Russell could also give you a very early and strong indication as to whether or not it is trending, right? Because take a moment to think. If people are risk on and they are willing to take on more risk for more rewards, right? Small caps, they oftentimes offer investors larger movements compared to the S&P, purely because there's just more potential for growth, right? So if the Russell is gaining, then it means that the economy is expecting growth, is doing quite well for itself in terms of the US, right? So right here, we did see from the bottoms right here, from the lows back in April, we did see the Russell rally up into 24%. Right now, it's more so around 18%, but this is a really strong rally, right? We came into this area of resistance around the 2.1k mark, and we did see a slight retracement right here, also rejecting off of that 200 EMA, pinpoint perfect, right? So I think that with this large rejection wave that we're seeing here on the Russell, I do want to see if we could potentially break out of these two areas of resistances, reclaim that 200 EMA, and then potentially use that as support. Or, you know, at that point we might also form some bullish UFOs around this area to then take price higher to retest all of these prior highs. So that's what I'm looking at for the Russell. Okay, but taking a look at the Forex Factory website, this is what we saw last week. We had the CPI year on year for the GBP, right, which came in pretty high compared to forecast, so 0.2% off of its price, which is a large jump from previous reports of 2.6%. So this is potentially a really good news for the GBP, because if CPI is high, it means inflation is pretty high. That offers potential rate hikes for the pound. Okay, we also saw a bunch of PMI releases for the eurozone right here, French, German, right? For pound, we also saw the PMI data, and USD we had just stable employment claims, not much surprise right there. Same thing for the PMI data for the US, which is also increasing, right? So we're seeing a pretty stable outlook for the economy, right? Which we'll get into actually after this segment. I think let's just go to the DXY right here after this segment. So we just covered the indices, right? And we know that we're pretty much bullish on the indices, right? But we take a look here at the DXY, right? And it looks kind of bearish, right? I did say that I wanted price to kind of hold above the 200 mark right here, and then we kind of the 100 mark right here, and we kind of failed to do that. We did come up here to retest this area, which is great, right? We forecasted last week that we could see that happen as long as we held above this area. but we didn't do that now, and then we just kind of like slumbered back down into the $99 mark, which is well below the $100 mark. So with that in mind, this is weighing on the dollar, right? Tariff dramas, especially with the EU, it's weighing on the dollar, but we're seeing a mixed economic data, right? We're seeing strong PMI data right here, and also retail sales is also pretty good for the US dollar, and this is potentially going to signal sideways markets until NFP next month, which is upcoming. It's pretty much 2 weeks from now. So we could potentially see a sideways dollar this week, especially coming into the final week of the month, which oftentimes does not offer any big movements for the monthly candle, right? So with this in mind, we could potentially see sideways markets for the dollar for next week. Okay, so obviously we are currently wedged between this structure point and this structure point, and between these two areas of resistance / support right here. So next week, if we could see potentially price come up here, we could take very short-term shorts with our targets, maybe down into this area, or just take out this swing low right here. It's also very possible. Currently, this is the range that we're working in. Or if we could go down to like the 4 hour, right, we could also come down into this area right here for some potential support and relief, right? We're currently trading well beneath the 20 EMA right here, which is denoted in blue, and we could potentially see prices trade in between these two areas until NFP in June, right? So with that in mind, just trying to not be too like having high hopes on betting on either direction. I am expecting sideways price action, which kind of correlates back to the pound dollar right here. The pound dollar is pushing crazy high into these areas of resistance right here. Crazy high. We're seeing strong UK econ data, including hot inflation, as we saw right here, really hot compared to last year's data, and we are seeing just overall strong GDP growth coming out of the UK, which supports this pound breakout. Oh, let me just clear off everything. Which supports this pound breakout into this area of resistance, and then we're leaving behind the 200 EMA right here. So with this in mind, I do kind of want to see the pound pull back just a bit after coming into these areas. I want to see the pound be overextended and then kind of come down back to retest potentially this area of 1.33 to 1.32, and we can potentially find some support to go higher from here. After we saw pretty much a really long consolidation. Let me just clean up the charts a bit. We did see the pound just consolidate around this area all the way from April until mid of May. Crazy range right here. We also saw that range right here. I think it was around March, right? This is before the tariff news, so the pound was also not moving as much as people would like them to be. I personally traded pretty well in this period, got my payouts as well, because I have a strategy for the pound dollar, which is mainly intraday mean reversion based, right? So that one was really good for me. But for others that banks their hopes on large movements or momentum, that probably wasn't the best market condition for your strategies, right? So looking at the pound dollar, definitely wanting some form of retracement after coming into these two large areas of daily resistances, right? So that is what I'm looking at for the pound dollar. Take a look at gold real quick. Right, so gold, I did mention that this is currently where we're trading at all-time highs, and we could have seen price come back lower into that range to retest areas of support, maybe even right down here. We found something around here, and now price is rebounding higher from it. We never really did come back into this area of support, even though we did technically come back into this area of discounted pricing, or at least just if you use FIPS, this is pretty much a fit for you as well. So let me just delete that. With that in mind, right now we're pushing steadily high. This isn't exactly crazy big moves of momentum, but it is still pretty strong. Climate is bullish right now at the moment. If you take a look at what we're seeing down here, it is bullish. So buys are looking pretty nice, even though I did say that last week I was pretty much neutral on gold. At the moment, it is still a mixed bag, even though price action, we could potentially come up to retest these highs. I'm not expecting us to break new all-time highs because we're seeing neutral signals from both sentiment as well as econ data, right? The US dollar, like I said, is pretty much lacking in clear direction as of now. It's pretty much ranging, and we could see that contribute to the range that we see on gold. Even though gold may not exactly move all the time inversely against the dollar, it does in these periods most times move pretty closely to the dollar, especially when the momentum starts to die out and then we don't have any new crazy catalyst to push gold higher from uncertainty, right? Definitely, even though we could see us retest all-time highs, I'm not expecting us to do like a crazy run higher once again from gold as of now, right? It's definitely possible we could respect this trend line, which I don't use, but pretty much just use it for people to visualize what it looks like, right? So we could retest these highs, sure, but even these all-time highs we could retest it, but I am purely not expecting us to just break out of it, the current state that we are in. Okay, so but obviously you shouldn't be bearish just because I said we're not breaking all-time highs. You shouldn't be bearish for gold. Gold has been a crazy outperformer. The bears have been struggling since 2022, but right now we could pause a bit for gold. Right, we could definitely see a pause within this range and just trading within this range for maybe even months to come, but definitely just waiting for any catalyst or any clear direction from the dollar for either a breakout below or a break above. But as of now, this range might be what we're playing in, right? The 200 EMA is far from where current price action is, right? It's like a freaking 14% move lower if we were to retest that EMA, roughly around. So definitely just waiting to see what price does around these levels right here. Okay, let's take a look at crypto. Crypto's been a crazy run compared to gold. So crypto has broken all-time highs, even though the break was short-lived. We immediately pulled back into the range. Let's move the drawings. So as of now, right, it's still pretty much just waiting for pullbacks into some of these areas right now for a potential long. Obviously, you have this level of price action around the 104 to 101k mark, but of course, as you can see, there is no daily UFO to support this area, so there might be a bit low probability. But of course, some of you do trade breaks and retests. So if it shows momentum right here, it could be a good idea to take some low risk longs into higher prices, right? But obviously you could also bet on the fact that it could pull back anytime sooner from how extended it's been for the past month, back into areas of support to find some liquidity, some momentum, some juice here to keep on pushing higher. That's also very, very possible, right? In which I actually like to show to you next week's news releases, right? So this is the week of May 26 to May 30. There's not a lot of news releases apart from the FOMC minutes for the US dollar, as well as the unemployment claims for the US dollar, and a few other euro and pound dollar news. There really isn't much next week, seeing as we are coming into the final week of the month anyway. So yeah, it might be a pretty slow month, especially slow week, especially we have holidays on Monday, which is tomorrow when this video drops, as well as Euro holidays on Thursday next week. So Might be a slow week, but regardless, it is still a week to show up anyway, and just take any setups that you think fits your strategy, without being too aggressive with things, right? So yeah, that's pretty much it for this week. Short and simple one. I'm kind of rushing because I'm short for time during this session, so I do apologize for that. But regardless, thank you all for tuning in, and I'll catch you in the next one. Peace.